Asset accounting. Asset accounting is also known as a A2R process. Okay. A2R means acquire to retire. Some people will say asset accounting. Some people say fixed asset accounting. Okay. So whatever name they say, all of them are same. Either you say ATR, acquire to retire, asset accounting, fixed asset accounting. It is the fixed asset accounting we are learning. So in ATR generally few process I have written cycle like acquire, depreciation, revaluation and retirement. Okay, this is the whole asset life cycle I have written. If you are first you'll acquire any asset, then you may write one more step after acquire. Next step is capitalization, then you can write the depreciation, then revaluation, then retirement. Okay, so this is very brief cycle of the asset. Now here and you can acquire the asset, either you can purchase or you can produce yourself. Okay, you can purchase from side also, you can purchase any asset from FI side also. You can produce also. Depreciation, anyway, you know that you have to run the depreciation. You can do the revaluation of the asset and you can do the retirement. For retirement, either you can scrap the asset or you can transfer the asset or you can sell the asset. Okay, so these are the sum. Now let us understand how depreciation is calculated in asset accounting. This is very important. That is the reason I'm repeating here. Yesterday also I was telling same thing. Today also I want to tell same thing again. So in asset accounting, there are two concepts, something called day wise calculation and another one is known as a period wise calculation. Okay, day wise calculation and period wise calculation. What is called day wise calculation? Day wise means depreciation will be calculated based on the number of days given in the month. Okay, so if any month is having 31 days, some month is having 28 days, some month is having 30 days, so even that differences of 1 or 2 days will also be considered while calculating the depreciation for the month. So day wise depreciation will consider number of days available in the month. Okay, period wise will not consider number of days available in the month. Okay, so we'll see first day wise, then we'll see period wise also. So in this example I have in this today session I have taken example. Let's say acquisition value, you purchase one asset. Okay, let's say 1 lakh rupees. So here for SLM method also 1 lakh rupees, WDV method also 1 lakh rupees and life method also 1 lakh rupees. So here in SAP either you follow day wise method or you follow period wise method. There are there are basically three kind of method which is very famous. One is known as a straight line method, one is known as WDV method, another is known as a life method. So either you follow SLM method or follow WDV method. For them you can say as a percentage method and another is a life method. Okay, so in my scenario I have I'm going to calculate straight line method 10 percentage, WDV 10 percentage and life method I'm also going to follow. Okay, so here let's say this is the asset I acquire. Okay, and 1 lakh value will be for SLM also, 1 lakh acquisition value is for WDV also, 1 lakh for the life method also. There is no difference. Okay, and based on SLM method I am charging 10%, WDB also I am charging 10%, and life I am considering as a 10 year of this acquired asset. Now how depreciation will be calculated for SLM method? First you have to calculate the annual depreciation. How will calculate the annual depreciation? You have to, this is the acquisition value and this is the percentage. Okay, so acquisition value and percentage you have to multiply and you will get the annual depreciation. You will get the annual depreciation. So annual depreciation 10 percentage of 1 lakh rupees. Okay, so annual, this is the annual depreciation. Similarly come here also, 1 lakh multiplied by the WDB percentage. So here also 10,000 rupees depreciation. Okay, annual depreciation. Here You don't have percentage, you have life. So this acquisition value divided by the life 10 year. Okay, so 1 lakh divided by 10 is equal to 10,000 annual depreciation. So this is how annual depreciation is calculated. Now you have to calculate the per day depreciation. Everyday depreciation, how much? This is for whole year. Okay, this is annual means whole year. This is whole year. This is whole year depreciation. So per day depreciation, how many? How much? How much for the first day per day depreciation? How much? So in 2024, February had 29 days. So we have total 366 days in the year. Okay, we have 366 days in the year because of one additional day in the February month. So total this annual depreciation divided by 366 days, if you do, you'll get the per day depreciation. Okay, per day depreciation. So annual depreciation divided by 366 days. Generally it will be 365 days, but in this 2024 February has 29 days, so 366 days you have to divide. Similarly here also 10,000 divided by total number of days in a year, that is 366, you have to divide. Similarly here also 10,000 divided by total number of days in a year, you have to divide by. Okay, now come to here. Now let's see monthly wise how depreciation will be calculated. This asset, this sheet I have prepared based on yesterday. So yesterday was 30 January. So I acquire this asset. This asset I acquire under 30 January 2024. Okay, 30 January 2024. On this date I acquire the asset. If I acquire the asset on 30, so how many days I'm going to use the depreciation in the January month? Only 2 days, 30 and 31st. 2 days I'm going to use the asset in the January month. Therefore I am writing in the January month only 2 days. Okay, in the February month I'm going to use 29 days. Okay, in the February month, so February start from here, I'm going to use till 29 days. Likewise, for every month, I have given the number of days I'm going to use the machine. Okay, so these are the number of days. Only in the January month, I'm going to use on 2 days because I acquired the asset on 30th January. So 30th plus 31st, 2 days I'm using the depreciation in the January month. For remaining all full month, I'm using the depreciation. Okay, now, then what will be the depreciation for the January month based on the SLM method? So here per day depreciation multiply by number of days you consumed or used the asset in the January month. So this multiplied by this will become your January month depreciation. Okay, this multiplied by this will become your January month depreciation. Similarly for February month, this per day depreciation multiplied by number of days. Okay, it's equal to your February month depreciation. Similarly, per day depreciation multiplied by per day depreciation multiplied by number of days. Okay, is your March month depreciation. Likewise, you have to calculate for every month depreciation. Is it clear, everyone? Uma, is it clear? This one, Uma, is it
Yes,
clear?
I got it. Yeah, I got it.
You got it, no? So
Yes.
then if you sum this, then it is your total depreciation. Okay, it is your total depreciation. If you sum this, then this is your total depreciation for the year. Okay, this is we have used in whole year 337 days. So this is the total depreciation for 337 days. Okay, why only 337 days? Because in the January month you are using only 2 days because you acquired on the 30th January 2024 only. Okay, now what is called net book value? Net book value means your acquisition value minus depreciation. So after using 2 days in January, at the end of the January month, what is the net book value or what is the value of the asset is left over? Okay, that is known as a net book value. In market, either you can sell for equivalent to this amount or not, that is secondary thing. market price or market value may be more or less. If you purchase mobile today, even after using one day, if you go and sell, you will not get what is the net book value of that asset, okay, of that mobile. So market value is different, but net book value means your acquisition value minus your depreciation, okay, that become your net book value. So net book value here, acquisition value is 1 lakh. I used 2 days in the January month. This is the depreciation. So at the end of the January, this is the value of the asset is left. Okay. In the February month, how much value is left? So from the acquisition value, you reduce January month also, you reduce February month also. Okay. Then this is the at the end of the February month value is left. Okay. You can calculate like this also. January month value left. Sorry. Here in the February month, January value, book value minus February month depreciation. If it reduce in this way also, you can get the net book value of the February month. Okay, so net book value means February means at the end of the February, after reducing the total depreciation from the acquisition value, what is the value left? Okay, similarly March month, acquisition value minus January depreciation, February depreciation, March depreciation. If you reduce at the end of the March, this is the actual value or net book value of the asset is left. Is there any doubt in this one, Uma or anybody? Any doubt? Now
No.
at the end of the March, this is the value you have. Now if you try to sell this asset in the market, either you'll get this 98 3.06.01 or not, that is secondary thing. Okay, that is different thing. But in your book, this is the value is left. Okay, in the your balance sheet, this is the value you have. In market while selling, you'll get more or less, that is secondary thing. Is it okay? Net book value calculation? Okay, Uma? So unless anybody has any doubt in this one. Uma, is it clear or doubt anything?
Yeah, it is it clear?
Okay. So likewise, at last, okay, if you reduce, so at the end of the December month, this is your net book value. Okay. See, from acquisition value after reducing all month depreciation, this is your net book value left. Okay. This is the net book value left. Here also you can do the calculation net book value. See, net book value you can at last you can match either it is matching or not. So 1 lakh acquisition value minus your total depreciation for the year. This is the 9207. So 1 lakh minus this, if you do this much it is coming, this and this should match it. Okay, so in this way also you can calculate. So what I did, 1 lakh minus this total depreciation I reduce and I got this much net book value. And even here also for December also you are getting same. So it means whatever you're calculating here month by month net book value is correct. Okay, so now come to here WDB. Similarly, WDB acquisition value 1 lakh and annual depreciation again 1 lakh multiplied by 10 percentage. Okay, now it is 10,000 per day depreciation same, annual depreciation divide by 10 divide by 366 days per day depreciation, again same concept, per day depreciation multiplied by number of days. Okay, so we calculated same way, and net book value acquisition value minus this one acquisition value. See here I have followed this one from January month net book value. I reduced the February month depreciation, so I got the February month net book value. So likewise I calculated for this also. This is the total depreciation for the 2024, okay, whole fiscal year, and this is the net book value left based on the WDB method. Similarly, go for life method. Life method means again annual depreciation, acquisition value divided by number of year. So it become 10,000 annual depreciation, and again per day depreciation, if you want to calculate annual depreciation divided by number of days available in the fiscal year. Okay, so this much coming same here. Per day depreciation multiplied by number of days you used the asset in the particular month. So multiplied by this. Same concept used for net book value calculation also. Acquisition value minus depreciation. Okay. Then again January month net book value minus February month depreciation. So February month net book value left this much. Likewise, it is calculated. Okay. So yellow color is a total depreciation and green color is your net book value left at the end of the year 2024. So now how it will calculate in the 2025? Let us see. Next year how it will calculate. Okay. So acquisition value, see, in the straight line method, it always charges the rate of depreciation on the original acquisition value. Okay. So for straight line method, acquisition value will remain 1 lakh only. But in WDV method, it always charges the depreciation on the net book value. Okay, on the net book value that we have already discussed straight line method concept and WDV method. So next year it will, based on the WDV method, it will charge the depreciation on the net book value left at the end of the year. Okay, so in 2024 this was the net book value. So that net book value will become basis for 2025 year depreciation calculation. So this is the acquisition value or net book value from the WDV method. In life method also it will follow original acquisition value only. Okay. Now annual depreciation again I am calculating for 2025. Same 1 lakh multiplied by 10 percentage, it is 10,000. This multiplied by 10 percentage, this much depreciation. See, in the WD method in 2025 your annual depreciation is coming down. Okay. Now based on life method, your 1 lakh divide 1 lakh divide by 10 year is equal to your 10,000 annual depreciation. Per day depreciation remains same. In 2025 we have to check how many number of days are available. Again in the 2025 also I saw in February month it is 29 days given. Okay, in February month it is 29 days given. So that is the reason again I am dividing 366 days. Okay, again I am dividing in 366 days. So annual depreciation divided by number of days is equal to your per day depreciation. See here per day depreciation for WDB is coming down because your annual depreciation is less here. Okay. Similarly here. Now come to here 2025 month. Now here in 2025 we are going to consume whole month. Okay. In February also whole month. So number of days I written here. Okay, number of days I written here from each month. Now how January month depreciation to calculate? Per day depreciation multiplied by number of days, this much coming. Per day depreciation multiplied by number of days. February month depreciation came. For March month, per day depreciation multiplied by number of days, it came March month. Likewise you have to calculate the depreciation for every month, and this is the total depreciation for the 2025. Now how to calculate the net book value? Net book value, listen very carefully. Net book value you have to calculate. See, last year December how much was the net book value left in 2024? This much. So you have to reduce from this to January 2025 depreciation, and this is your net book value. So this minus this you have to reduce, not this 1 lakh minus this one. You have to reduce from the previous net book value, that is December month left net book value minus January of 2025 depreciation is equal to January 2025 net book value is this much left. Okay. Now reduce for February month. How February month I will calculate? January 2025 net book value minus February month depreciation is equal to your this much net book value. Similarly here March month, February net book value minus March depreciation is equal to March net book value. Is it clear, Uma? This calculation? Is it clear,
Yeah,
Uma?
calculation is okay, Hari. If the business wants to change the first 6 months SLM and the next 6 months WDV, is it?
Possible, yeah.
Possible.
You have
Yeah.
not watched my video. Again, I'm telling. In that, I
No.
have already taught. Please watch
Oh,
that video. Whole
okay, okay,
playlist is already given. Yeah.
okay, fine.
Okay. And I have also told you one scenario also, in which scenario you cannot change depreciation.
Mm,
If you remember, if first depreciation was having day wise depreciation, and second
yes.
you want second depreciation key you want to change to the period wise depreciation, it will not
Yeah.
allow. Okay.
Yeah.
So okay, calculation is okay because I'm focusing on calculation because this is very
Calculation is,
important.
yeah.
Okay,
Yes.
na?
Yes.
Now for WDB, again, how January month depreciation it will calculate? Per day depreciation multiplied by number of days. So this much depreciation came. For February month, per day depreciation multiplied by number of days. This is February month depreciation came. Okay. Now, how net book value it is coming for January 2025? Last year net book value, last year net book value minus January month, uh, minus January month depreciation is equal to this much net book value. Okay, this minus this is equal to net book value. Now January month net book value minus February month depreciation is equal to February month net book value. Is it clear, this part also? Is it clear, Uma, Shailesh, or Muthu? I know Muthu knows it. So is it clear, everyone?
It's clear.
Okay, now because why I'm telling, because somebody is from non-commerce background, so they should know this calculation. Similarly, here if you come life method, same concept, per day depreciation multiply by number of days. So this is the depreciation. Now reduce from last year net book value and January month depreciation. So become your net book value. This minus this is equal to net book value. The February month net book value is equal to January month net book value minus February month depreciation is equal to net book value February month. So this is how it is calculation is done. So in period, sorry, in period sorry, day wise, in day wise concept, it will consider number of days available in the month. Number of days available in the month. Okay, now let us go and check how it behaves in the period wise. How it behaves in the period wise. So same value I'm pasting here also. Okay, acquisition value 1 lakh, 1 lakh, 1 lakh. Okay, in period wise also we have SLM method, WDV method, and life method. Okay, same method we have available in the period wise also. Now observe very carefully. So this is your acquisition value. How in SLM method it will calculate the depreciation? So this acquisition value multiplied by rate. So it became 10,000. Here also acquisition value multiplied by rate, it became 10,000. Here acquisition value divided by number of life, a life is equal to your annual depreciation. Now your day wise depreciation is not applicable in the period wise. In period wise, sorry, yeah, in the period wise, day wise per day depreciation calculation is not required. Then how it will calculate the depreciation? See, every month how it will calculate the depreciation? Annual depreciation, okay, annual depreciation divide by number of year, number of month, okay, number of month you are going to use, it will calculate the depreciation. I purchase in the January month, so from January to December it is 12 month, so I'll divide the total depreciation by 12 month. Okay, if I had purchased this asset in the, let's say, February month, then total depreciation divide by 11 month. Okay, so age many age month I'm going to use in that fiscal year, I have to divide by that month. Okay, that month. See, in the January month I just use 2 days, but still I'll be charging the depreciation for whole year. Okay, whole year. So here, since I purchased in the January month, from January to December, it is 12 months. So annual depreciation I am dividing by 12 months. But again, I'm repeating, if I had purchased the asset in the February month, then I will divide the annual depreciation divide by 11 month only, not from the January month. Okay. So this is in this you have lot of other exception. If you remember, I taught you there is something called period control method concept. So period control method concept only works for the period wise depreciation. Period control method works only for the period wise depreciation. In that you can control, you either you want to charge the depreciation from January month, or you want to charge the depreciation from the February month, or you, or let's say you are purchasing in 2024 but whole year 2024 you don't want to calculate the depreciation. So anything is possible in the period wide depreciation. That configuration you can do in the period wide depreciation, but period control doesn't work in the day wide depreciation. Okay, period control doesn't work in the day wide depreciation. Period control method is only applicable for the period wise depreciation. Okay, again I'm repeating, if you are purchasing asset in the January month 2024, either you want to calculate the depreciation from the January, or you want to calculate after 6 months, or you want to calculate after 1 year. Everything is possible in the period wise depreciation, and one example I have already taught you also. Okay, so here depreciation it is calculating how every month annual depreciation divided by number of months you are going to use the asset. Okay, so it become, this is the depreciation. So here 10,000 divided by 12. So every month this is the depreciation it is calculating. See, every month it is coming same, there is no more or less. Okay, now net book value, same concept, acquisition value minus depreciation. Okay, so here you have acquisition, this is the acquisition value minus depreciation, your net book value. Similarly WDV, annual depreciation this much divided by number of months. Similarly here also, so everywhere it is coming same depreciation. Now in 2025, for SLM method, acquisition value will remain same 1 lakh. For WDV method, that net book value will become the acquisition value, and here 1 lakh only. Now how depreciation will calculate? Same, annual depreciation divided by number of months you are going to use the asset in the 2025. So 12 divided by 12. Here annual depreciation divided by number of month you are going to use in the 2024. So 12 month here also. So 9,000 divided by 12. Likewise here also annual depreciation divided by number of days, number of month you are going to use in the 2025. So likewise you have to calculate the depreciation based on the period wise. Is there any doubt between the depreciation calculation day wise and period wise? Anybody has any doubt in this one? Please ask me. This is very important. Any doubt? Uma, Shailesh, Kalyan. Any doubt in there?
No,
Yes,
sir.
no.
No.
Please
No,
reply is
no.
no, right?
Yeah.
Okay, fine. If you are okay with this one, then let us. Today I'm just planning to do the revision. That's the reason I'm repeating all this thing. So now let us see what and all we have studied so far. So first of all, I'm going to see the configuration step what we did. The asset accounting. If any doubt, please ask me. So first we did define startup depreciation. Topic is very big, so I'm trying to revise it so that you'll remember. So chart of depreciation we did, in that we define multiple um, depreciation areas. Then next we did the currency, foreign currency setup. Foreign currency setup we did. Okay, then third we assign or define zero tax code for non-taxable transaction. So this is the we did. After doing these three, Then we assign chart of depreciation to company codes, right? Then in fifth step, so this is one segment we can say. In the fifth step, we define asset class. To define the asset class, we define account determination, screen layout, 5.3, number ranges. Okay, this is what we define. Okay, now then sixth step, we defaulted. First we define screen layout for depreciation area. Okay, then 7, we defaulted asset class depreciation area. Okay, this we did. Then after that what we did the depreciation key creation. But before this we did the depreciation key creation. First we created the depreciation key. In this depreciation key, we created multiple kind of depreciation key: life method, percentage method. In percentage method, we created WDB method. In WDB multiple rate we created, SLM multiple rate we created. So in depreciation key, major important point is base method. Point 1, base method. Any point you don't understand, just please ask me. Base method, then balance declining method. Balance declining method I have not taught it. I will teach you. Then 6.3, we saw the period control method. This I already taught you. Period control method. Then 6.4, multi-level method. And multi-level method also I already covered you. Multi-level method. Okay. So this is the important for depreciation key: base method, period control method, multi-level method, declining balance method. I will teach you soon. Then next we did this one. Okay, 7 and 8. This step we did. After that we did technical clearing account definition. Define technical clearing account. Okay. Then 10 step we did document type mapping for valuation view. Okay, for valuation view, what a document type you want, that we define. I have shown you, if you don't map only KR document type will come even for your operational view and valuation view. But business wants for valuation view AA document type, double A document type. So how to map that I have taught you. Then 11 number I taught you. Assign financial statement version to depreciation area. Okay. Then 12 number we saw GL mapping, account determination. Account determination. Okay. Then 13 number is before creating the asset master, what is the prerequisite you have to perform in the in S4 HANA. So that is your opening the asset fiscal year that you did from FAA underscore CMPT code and generating the fiscal year. Okay. So this is the prerequisite before you create the asset master in the S4 HANA. So we saw from configuration point of view, these are some basic thing we saw. Other thing also we have seen, like we have decided if I'm purchasing asset with quantity, so in which depreciation area that quantity should be updated, either in for zero year it should update, or for non-leading ledger it should update, or for leading ledger it should update. So that part also I have taught you. I told you what is the difference between ECC and S4 HANA for that point also. So I've taught you many other points. So these are the important point. Now tell me in this point, in which point you have confusion. In this, which point or anything if I'm missing, please add it here. And tell me in which point you have the confusion. Do you have any confusion in this one? Anybody has any confusion in this one? Anybody has any confusion in this one, please?
I have a doubt regarding here. Document splitting. Uh,
Doc, that also I covered. Sorry, I forgot. That is very important configuration. Additional
there
account
I'm
assignment.
struck. I need a little clarity over there.
No problem.
Yeah.
Additional account assignment. Okay. So this is, I always say this is asset accounting side document splitting. Okay. Document splitting. So any error you get in document splitting in the asset side, when you purchase any asset, any transaction you are performing in the asset accounting side, this is the first place you have to come and check. T code is exit. If you remember, T code is also good. This is the T code. Okay, exit. So in this, how the profit center is deriving in the asset transaction. So that is deriving based on the asset master. You are entering in the asset master cost center. Correct, Uma? In the asset master, you're entering cost center, right?
Yes. Yes, Hari. Can you show in the system master?
I'm going to show you. Don't worry.
Okay.
So
Okay.
in the asset master, you enter the cost center, right?
Yes.
Correct.
Yes. Yes.
If you don't enter the cost center in the asset master, it will throw your document
That,
splitting will not work. So asset master is a source to derive the profit center in all the asset transaction. Now let me show you in the system. So that is the reason cost center I have made mandatory in the asset master, so that user should not forget to enter the cost center in the asset master, because that is very, very important. Now go to ES03. So this cost center is very important. First point. Okay. This is important, Uma. Is it clear? First point. Origin is this one. In the asset
yes.
accounting,
Yes.
you are
Yeah.
not entering manually, right? You are not
Yes.
entering anything manually. So from where it is deriving? It is deriving from here. Now to derive in other line item in the asset accounting, you have to go and do the configuration here. Let me go to ORFA, go to general, not here, go to here and go to here, additional account assignment object. First go to here, you have to activate which are the cost subject you want to derive in the asset, in the asset line item or in asset transaction for on the asset master. Because in the asset master you can give multiple cost subject. Today I'm showing cost center, you can give internal order, or you can give WBS also. So many things you can enter in the asset master. So for us, the document splitting works based on the business area, segment and profit center. Correct, Uma?
Yes. 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 I
Correct.
got it. Yeah.
So
Yeah.
if you are activated business area, segment and profit center, all three at document splitting level, that is mandatory for you to activate here. but as of now we are following only profit center, right? Correct, Uma?
Yes. 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 Yes.
Correct, right? So that
Yeah.
is the reason I activated the profit center.
Mm.
Okay,
Yeah.
profit center is a mandatory for me. Okay, because
Okay.
I have activated the document splitting at the profit center level. Okay,
Okay.
fine, right?
Yeah.
Okay, so once you activate here, go to next step, come to here, then you select your company code US 10 and go to here, and then you have to tell for which endal depreciation area the this profit center should get derived. So for real depreciation area it is mandatory. Okay, for real depreciation area it is mandatory. For other depreciation area also, if you want to derive, you can maintain. So first 01 is my real depreciation area and 11 is my real depreciation area, right? These two are my real depreciation area, correct?
Yes.
Remaining
Yes.
remaining our area does not post, correct?
No.
Correct, na?
Yes. Yes.
So
Yeah.
for these two it is mandatory to maintain, because at this two level you are posting the accounting document, but for 2 and 3 you are not posting any accounting document, you are just calculating them. Okay, na? Okay, na?
Okay. 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 Hari.
Area does not post means it will just calculate in the asset accounting side, but it will not post any journal entry into the GL side. Is it clear? If you have not understood during depreciation area creation time, again I'm repeating, I've already taught you. So area post in real time, what it will do, it will post accounting entry in GL side also. Any depreciation area created as area does not post, that will just calculate the value in the asset accounting side, but it will not post in the GL, it will not hit to any GL. Okay, there won't be any accounting entry, that is what I'm trying to tell. Okay, na Uma?
Yeah. This I got it. Yeah.
So if there is no accounting entry, it will never ask you to enter profit center or
Profit
cost
center.
center.
Yes.
Okay. But
Yeah.
these two will have the accounting entry generated. So for these two, you have to maintain. So select this one, go to here. Okay. For this two transaction, you have to maintain one for acquisition time, another for depreciation run. For here, you are not restricting for any transaction type. You are giving for all the transaction type here, and you are telling here one time APC means acquisition means purchase time, another for depreciation run time. So these two time you want to derive, okay, and you are activating again here. Is it okay, Uma?
Yes. APC values posting.
Means purchase value, purchase.
Okay. Okay. Yeah. Yeah. Got it. Yeah.
Your
Mm.
purchase enough from
Yeah.
F.90.
Yes.
So
Yes.
purchase. Okay,
Okay.
so
Okay.
one
Got it.
purchase and depreciation you have to activate. You take, this is the technical name of cost center, this is the process. So cost center two time, one time depreciation, one time purchase. Profit center two time, one time depreciation, one time purchase. Okay, na, and activate it. Fine, right? Okay, na, Uma.
Yes. I got it. Yeah.
Similarly, please do for another depreciation area 11 also. Okay, okay, now. So for real depreciation area, it is mandatory. Fine, right, Uma?
Yes. Now it's got it. Yeah. I got it.
So any other doubt anybody has in this? Anybody has any doubt in whole this asset accounting? Anybody has any doubt? All this configuration step. Depreciation key is very important, very important. If you are not able to understand depreciation key, then your whole depreciation calculation will go wrong. In that period control, please practice. Okay, it is very important. And please watch my video. In that video I already explained how to do the asset shutdown. Okay, how to have different depreciation rate, how to maintain in asset master level, how to maintain it multi-level method. So please watch those videos. Those are very, very nice videos. Okay, based on, so what I did when I learned anything on my project, I immediately recorded those video and I have uploaded. So those are real time video, and those kind of requirement you'll get in the project. So please focus on that. Okay. So technical clearing part, no doubt, right? No doubt, na, in the technical clearing, this one, because this is also they're asking some time in the interview. Okay, then if you remember few thing, I have not taught many thing, but few thing I have taught you. The difference between ECC and S4 HANA. Very few thing I have taught you. Differences between ECC asset accounting, S4 HANA asset accounting. New asset accounting, what we are telling now, new asset accounting was there in ECC also. Okay, it's not that in new asset accounting was not there in ECC. New asset accounting was there in the ECC also, but ECC had limited functionality, but new asset accounting in S4 HANA has the more functionality. So this I have taught you. In this major thing, if you remember, I taught some differences for the depreciation area. Okay, that I told more than one depreciation area can have the real time depreciation area. Okay, more than one depreciation area can be real time depreciation area, real time depreciation area. And I told you what is the meaning of real time or fake time. Okay, I mean derived depreciation area. So delta depreciation area is not required. Delta depreciation area not required, is not mandatory. Let me tell, mandatory in S4 HANA. If you want to create, you can create. Delta means difference between two depreciation area. Okay. Third point I told, in depreciation area, earlier we were entering the ledger. Now you have to enter the accounting principle. So here, if you remember, I don't know how much you remember, go to ADB, APUS. So here you are entering the accounting principle. Earlier only this option was there, ledger option only was there, but now you are entering the accounting principle. Based on accounting principle, ledger is coming. Okay, so accounting principle is depreciation area. Okay, and I also told you that for asset accounting is not integrated for extension ledger. Okay, you know it. For extension ledger, no need to create any depreciation area, and for any customized currency type, if you have created any custom currency type Z1 Z2, for them also not required. Okay, then I taught you difference between ECC and S4 HANA, or difference between BSEC table and AC DOCA table. In AC DOCA table, additional 4-5 fields you can get extra for the asset accounting. One is additional account determination field, account determination, asset class, and something called partner asset. This is what I have observed. You may have more than this also. I'm not sure. If you may have more than this also. You have to find out. Okay. So in AC DOCA, additional account determination, asset class, and partner asset fields are available. This will make your reporting more flexible. So I have not particularly still taken the classes for the ECC asset accounting in S4 HANA asset accounting, but during the training time, I have told you these are the some points where where we have found the differences. Another point I have told you earlier, quantity you can update only in the leading ledger depreciation area. But now SAP has option either quantity updation. You have to choose either you want to update in the leading ledger depreciation area or non-leading ledger depreciation area. Non-leading ledger depreciation area. But this flexibility was not there in the ECC. Okay. So these are the some point I have taught you. Okay, then I have also taught you technical clearing GL concept, technical clearing accounting concept. Okay, what else? Anything else I taught you? Okay. So these are the some concept I already covered during our class. I will specifically take the class, 1 day class for ECC and S4 HANA asset accounting difference. In that I'll cover 30 to 40 points. Okay, but these are the some point I have already covered. Now anybody has any doubt in this one? Anybody has any doubt? Yes, no, please. Anybody has any doubt in this one? Already left or any doubt, Uma, in this
No,
one?
no doubt. No doubt. Yeah.
You need to know asset accounting point by point because in interview they will ask you. Okay, you
Oh.
need to practice very well,
Mhm.
and I'll be covering more and more scenario. Please watch all those playlist video. There are 8, 9.